How have you guys been? I haven't been uploading any videos for the last 7 days. Of course, I have myself to blame. I have been indulging in this entire Chinese New Year season. And for my Chinese friends, I do hope that you guys enjoy the different gatherings with your families after this entire pandemic ordeal. And for my non-Chinese friends, I hope that the recent rally gave you some sort of consolation and you guys enjoyed the long weekend as well. So truth be told, I feel more motivated to make videos when the stock goes down. Essentially, at least for the Chinese or the Hong Kong market, they are currently still on a long break and the Hong Kong market only restarts or reopens on Thursday. So there really isn't any major news because probably even the government or the regulators are on a long break themselves. Besides that, if I were to look at the US market, there really hasn't been any action or any movement around many of these Chinese names. They're probably up 1% and down 1%, so nothing exciting to update as well. So I need to kind of get back into the momentum of creating videos. And of course, I have been indulging in a lot of all these small recreational activities on the side, and I do hope everyone the best of luck this year, both in the stock market and also in your life. So I'll be providing a reaction video to a fellow creator with an extremely intriguing title. Alibaba stock. How I lost $100,000+ on Baba and how you can avoid my mistake. And of course, before we head into the video, always remember to help gently smash the like button. And did you see the confetti there? That's your ultimate objective, to help smash the like button and get the confetti. So Weibo's new welcome deal for the start of 2023 has never been better. So you can get up to $150 trading vouchers if you fund and trade your Weibo account today. So all you have to do is to sign up for a new account with the link below and deposit at least 2,000 Singapore dollars and execute one buy trade on a stock or ETF and one mutual fund, coupled with buying one option, and you will get to enjoy a whopping 10.5% return on initial capital. So for those of you who are still considering sitting on the sidelines, I don't know what's holding you back. So when the markets are slowly selling down and S&P 500 just keep grinding downwards, I think it's a good opportunity to start dollar cost averaging into the markets. And you can even get an additional $150 to do so. So Weibo prides itself on zero commission trading, and you can stop paying all the redundant commissions and use it to buy more shares. So recently, they've also allowed for a zero fee subscription and redemption of mutual funds on their platform. So don't let this opportunity slip away so easily. Link to sign up is in the description box down below. Thank you Weibo for sponsoring this video. So I think this video was actually published back in 29th of August 2022. So it has been quite some time, I think at least 3 to 4 months now. So if you were to backtrack when Alibaba, or essentially when the creator sold Alibaba, on the 29th of August, Alibaba was probably trading in the $90 odd dollars range. In hindsight, at the lowest, he probably heaved a sign of relief because he probably lost another 50%. But after this recent rebound, I'm not too sure what his cost basis is, but I guess he probably could have recouped a little bit. But I think let's get into the video proper to make a much fairer assessment. So let's get right into it.
Today I want to make a special video about how I lost money with Alibaba and what you can learn from it so then you don't repeat my mistake. So I think this is going to be an interesting video, so let's dive into it. Thanks for watching this video, and if you have been following my channel, you'll notice that sometimes I mention about the lessons I learned from Alibaba. So now it has been through for almost a year and a half now. I decided to make a summary video.
So a year and a half since the posting of that video, I would presume that his entry is probably around early 2021. That would give or take around 18 months from there. And that's also around my entry. And let's see what lessons that he took away from this entire Alibaba or Chinese tech episode.
So they can learn from my mistake and how you can potentially avoid making the same mistake in the future. Let's get started. Now, Alibaba is one of the largest companies in China, and it has multiple e-commerce stores, it has Ali Cloud, and it's actually very similar to Amazon in the United States, where there's Amazon Cloud, there's the e-commerce platform with Amazon as well. Basically, they're a conglomerate. And when you're looking at the typical fundamental and technical analysis, during the time I was investing, it was actually fantastic. Then it makes you wonder, well, how did you end up losing money? And in fact, I lost over 100,000 on Alibaba. So that's why I always think a lot about how I could have avoided this mistake and how you can do the same in the future as well. So let's get started. If you go through my free training down below or the free chart course, you will learn how to get this technical analysis template. So it has a Bollinger Band and 2 EMAs. So the 2 EMAs is a red line and a blue line, and the
I think before I get into it, personally, I'm more fundamentally focused. I don't really look into the technicals, but let's see what he has to say.
Bollinger Band is this upper and bottom light blue line, which helps you do the technical analysis. So you can see that I rewind all the way back to June 2021, which is almost the time I got into Alibaba. So during this period, you see that the trend for Alibaba is actually quite strong. And you can see that usually it bounces near the red EMA, which is this red line you see here. In fact, I actually entered once near the 2020 December. It went up. I took half of my profits here, so that I made money there. And then I re-entered again when price dropped back to the red EMA. So at this point, then you can see that, okay, it is kind of having a downtrend line. And before skipping ahead, I added more of my position here. Now, if you follow through my program and you kind of understand my thinking process, it's really about understanding why the stock is dropping. So at this point, one of the subsidiaries, Ant Financial, so that is the competitor for WeChat Pay, is planning to go IPO. And obviously, Jack Ma has a lot of shares in that company, so it's supposed to be a piece of good news. But then during the presentation, Jack Ma said something that offended the Chinese government, so then they pulled the plug on Ant Financial's IPO. So this is what caused the initial drop. Now, typically, if things do work out, let's say Jack apologized or whatever, then it will continue to go up, right? So if you think about something like Ant Financial IPO, is probably one of the biggest IPO in the world, probably within top 10. So it's going to be a really profitable for all the shareholders, including Alibaba. So this is the Bloomberg News article as of October 19th, 2021, saying that Ant Financial's IPO is stuck in limbo. And this is already a couple months after I invested. So during this period, if I scroll a little bit forward, you will see that the stock continued to go down. Now, as a value investor, this actually does not change the fundamental view of Alibaba. So the company is still growing 20-30% or more every year. It is still extremely profitable. And when you're looking at all the China stocks, it's probably one of the safest China stocks out there, along with Tencent, JD, Pinduoduo. When you're investing in China, it is a lot more complicated because the accounting standards are different, and a lot of the cultural differences and the way people report stuff are also different, which is why you need to be extra careful. Now, during this time, I was actually working in Hong Kong.
I think before he shares his experience, if I'm able to chime in, I think there are two notable points that are written here, which I will actually expound a little bit further in the later part of this video. I think the first part is, we have to recognize the fact that I think this is, of course, many of these commentaries that we make now are hindsight bias. But I do share, or I actually do resonate a lot to the point where when you are looking, when essentially Alibaba was nosediving from that highs of 300 to around 220 or 240 range, that was probably when many investors were interested in the first place, because the news then was, hey, Jack Ma said something wrong and the Chinese government is stopping the IPO. Indefinitely at least, because we don't know what were the issues then. But many people were probably punting on the side, saying that this might be a short-term challenge for the company. They are able to right this wrong sooner or later. But that said, I think at that point in time, when we really rewind back to when it was trading at that range, when he was showing the charts, I think fundamentally, I can't speak for the technical side because I never really look into technical analysis. But fundamentally, the company was still executing really, really well. I think quarter after quarter, the earnings were still good. They were able to deliver top line growth at least 20-odd%. Even during the peak of the crackdown, which is back in 2022, at the peak of the crackdown, they managed to grow top line by 19%. And you're telling me that a 19% top line growth company, they are not able to command a certain valuation? I don't think so. So I think fundamentally speaking, it was relatively well, or it was in a relatively stable position, and they are speaking from a position of strength. But I think as time goes by, it's quite interesting to see how the results essentially deteriorate exponentially. From 19%, they immediately just swing down towards maybe a 0% or a negative 0.1, 0.2% year-on-year growth. And that was really that stark difference. And of course, many people like to say that, hey, because you don't look at technical analysis, the chart experts are already trying to signal to you that the fundamentals are slowly eroding. But I think, like I wanted to echo what Eric has to say. I think as a value investor, probably our timeline is extremely long. We are talking about like decades long. So if I really have a timeline of 10 years and I'm in this stock for at least two years plus and counting, I still have 8 more years to go. I'm not really concerned with this kind of short-term fluctuations. Of course, you can show out all the different charts and scheme it out and tell me that, hey, look at this percentage growth or look at this business. Essentially, a lot of people are basically bashing on Ali Cloud and saying that from a 60% year on year, it's now growing at like what, 7, 8, single-digit growth. And they're saying, aren't you worried? Look at it. Fundamentals are clearly changing. What I have to say is this. When a company is experiencing some sort of challenge, especially when it's a macro challenge, every single Tom, Dick, and Harry company out there is gonna suffer. Trust me on this, and we're gonna see it in real time playing out in the US soon. I don't care how good your business model is. So unless your business model thrives on a weak economy, if not, look at all your big tech companies. So your Facebook, your Amazon, your Microsoft, your Apple. Just wait for it. You'll see the revenue slow down, and sometimes it'll go from bad to worse. And your only edge here as a retail investor is really your time horizon. If you can wait it out, if you dare to buy in bad results, I don't think you'll do too badly. I think at least that's my assessment. So especially when people keep stirring, big tech companies are laying off workers. Microsoft just reported their earnings and they're giving horrendous guidance. I think it's even lower than the lower end of the street estimates. So that's when you want to buy stocks because everybody is essentially throwing in the towel thinking that, hey, all these stocks are uninvestable or hey, all these companies are going to have a very bad year ahead. So the worse the outlook gets, the more excited I am as an investor. The second point that we want to talk about is really this entire NIPO, essentially the Chinese government having some sort of personal feud with Jack Ma. So personally to me, I think this is a lot of narrative building. So initially, I didn't really put too much thought into it. But I think in hindsight again, after the 2 years ordeal, it was probably a signal for something bigger. And for those of you who had the foresight to spot it, you guys probably are a lot more patient and you guys could probably accumulate at a much later position. I'm not saying whether this is a good or bad thing. I mean, it's up to personal investors and their own fundamental belief of the market. But that said, I would also just like to say that a lot of people who has been punting or waiting on the sidelines probably haven't entered as well. They've just been saying that, China is uninvestable. And even until now, when there are a lot of good news, I'm not too sure where all these investors are. Have they loaded the boat? Have they increased their position? Have they allocated 100% of what they wish to allocate to China? I don't know because people are just basically commenting anonymously online. So do feel free to leave in the comment section down below what you've done, what you have learned from this entire episode, and how would you improve your process in the future. But back to Eric.
And I was traveling to and from China for a couple of years. So to me, as a seasoned investor, I thought I understand the environment quite well. I understand how the government policy drives innovation, enhance prosperity within China. But turns out I was wrong. And as we go through the remaining news article, you'll get a better feel of, how and why I made this mistake. And well, is there anything I can do to correct that? So the next article is that Ant boosts capital to 5.4 billion 1 year after IPO halted. So the IPO actually halted for a lot longer than I expected. And at that point, my position is deep in the red. If Ant actually went IPO during this 1 year period, it could have turned Alibaba around, which is kind of what I was hoping for, but it was just dragging on for a prolonged period of time. Now, the next article is that there's a technology regulation crackdown in China. So this is actually something you haven't seen in the US market before. So in US market is very capitalistic. And when you're looking at a capitalistic, companies will grow bigger and bigger and bigger and eventually achieving some sort of monopoly status. I have a book here, Peter Thiel, 0 to 1, that talks about that. And in a capitalistic world, the company that ends up succeeding will become monopoly, like Google, Amazon, Apple, so on and so forth. And in China, they issued a series of regulation crackdown targeting like Tencent, Alibaba, to basically prevent them from being a monopoly. Now, initially, I thought, well, it shouldn't be that bad. Probably you can pay some fine and get on with it, and it will be business as usual. But then this actually led to a slowdown in acquisitions and also a slowdown in hiring, and basically depressing the technology market as well. Because the way China works in terms of the technology investment side of things is that a big company will have not a significant, like a minor investment in many different companies. So for example, Tencent might have a small investment in JD, so then they also have a partnership. So then all these technology companies are connected in one way or shape or form, even if they don't have significant control. Whereas in US, you might have a lot more significant control. You buy out the entire company, get the technology, so on and so forth. But in China, they have a lot stronger focus in these minority investments. Now, this crackdown actually decelerates the technology sector, which turns out to be a lot more severe than I expected. And here's an interesting cover from Bloomberg back in the day, where you need to move fast and obey the party. It really goes to show that if you're on the opposite side of the China policy, you'll get burnt badly. Let me just continue forward with Alibaba, and at this point it's 140. I previously entered near 200, so at 140, 150, I still feel pretty comfortable about the position, because I think, the chance of it recovering is high. If there's just some good news for Alibaba, it will take it back up. And if you continue...
Okay, I think before he actually dived into the technicals, he made three separate points again. I think there is always this age-old debate of whether China is capitalistic or not. It's a better place to invest in the US, stuff like that. I think that's not the debate for this video. So I would be extremely cautious by saying that many of these American counterparts, they're let loose to be able to run as a monopoly, etc., etc. So I don't think so. I think we have seen many actions recently suggesting that there are a lot of antitrust regulators snooping around, trying to put their hands into many of these big tech companies. I don't know how effective would it be, because lobbying has essentially become a culture back in the United States. But I would just like to say that I wouldn't go so far to say that US is 100% capitalistic while China is 0% capitalistic. So if China really doesn't have that entrepreneurship spirit and they don't embrace capitalism at all, how did you think companies like Alibaba and Tencent even came into fruition in the first place? And I know a lot of people like to argue that, hey, it was only after Chairman Xi that China lost this capitalism spirit. Mind you, I think TikTok, the parent company ByteDance, that took the world by a storm, essentially steal everybody's lunch, including Alibaba, Tencent, Meta, Google, etc. They were born in the Chairman Xi administration's era. So why would there still be entrepreneurs, and why are there all these bright minds still working in China, creating the algorithms and trying to make the company even more prosperous? So on the second part, for sharper listeners, you can kind of feel like Eric in this case is trying to time his entry and time the market. He was trying to time when the crackdown would end. And initially, of course, in hindsight, when I look back at my own experience, truth be told, if I touch my heart, I was also trying to time the end of the crackdown. I thought that it was nothing serious and we would probably get out of the woods soon. But that said, I wasn't at the edge of my seat trying to hope for a recovery because I was holding shares. I was not time bound. I was ready to actually hold the shares for the next 5 to 10 years. So I'm not really concerned whether the stock continues to stay depressed or whether it shoots up tomorrow. Because if it goes depressed and if I have money, you actually want to add fuel to the fire because you can actually increase your position at a much lower cost. So that's on the second part on timing the market. You have to be extremely frank and transparent about it. In your own investment journey, you need to know that you're trying to time the market, and you need to tell yourself that, hey, this is probably one of the blind spot that essentially blindsided you. And on the third part, I'm saying that if you're on the other side or if you're against the government, you'll be burnt badly. I don't think this is specific to China. I think if you're against any governments in the world, especially if you're investing in the country, you probably wouldn't benefit much. Of course, you can go on to argue that, hey, in the US, even if the US government is not very favorable to a company, you probably won't do as badly. I think a great example is Tesla. A lot of Tesla investors have been saying that, oh, the Biden administration is extremely corrupted. There was a lot of like electric vehicle summit and they didn't invite Elon Musk, yada yada. I don't really know the details, but look at how Tesla have run, and if the company is executing, regardless of whether the government is supporting them or not, they will continue benefiting shareholder. And to that point, I think I do agree, but not totally, of course. At the end of the day, especially investing in a particular company, as long as you're stock picking, the companies have to execute well. The economics have to make sense, and the company have to generate profits. If not, how is it going to benefit shareholder? Tesla in this case is a phenomenal company that managed to generate a huge ton of profit. And that is also why the shareholders benefit in lockstep. And if you're investing in a trash company, regardless of whether the country supports it or not, and it's probably not going to benefit you in the long run as a shareholder. I think that's just my 2 cents. Back to the video.
Forward, it actually ended up going to 100. That is another 30% drop. Now, during this period, Charlie Munger, one of Warren Buffett's partner, also invested in Alibaba. That actually gave me confidence to invest in Alibaba because obviously, if I follow, Warren Buffett or Charlie Munger, chances are I will make money. Now, having said that, if you notice one of my early investments, I follow Warren Buffett's disciple to invest in the stock, and it ended up going bankrupt in 2 weeks. It's not always positive, even if you follow Warren Buffett. Next article. The regulation is getting more intense, and there are actually a lot of fines being issued to Tencent, Baidu, Alibaba. And this depressed the stock price significantly, and they got hit by these fines multiple times. When it comes to these fines in China, the difference between US and China is that in US you might be able to appeal it, you might be able to go through the court, but in China you just accept it and you pay. Or you sometimes even pay a fine even if they have not issued you a fine yet, which was actually the case for Tencent. And when you compare between Tencent and Alibaba, Tencent is more China-centric because their business itself is mainly in China, whereas for Alibaba, it's actually more international. They're actually expanding into different countries in Southeast Asia and Africa as well. Next article. Now, this led to job cuts, obviously, because if you're slowing down in growth, slowing down in acquisitions, then obviously you would slow down hiring as well. So,
sounds familiar, right? I think this is not really a company-specific issue. And like I suggested in the earlier part of this video, sometimes when you're in a down cycle, when everything looks bleak, the future, the outlook of the company, the outlook of the country seems like it's beyond repair. That's also when things get from bad to worse, and it's not necessarily a company-specific issue. Why I say it sounds familiar, I think just recently again, Google started laying off employees. So it's really kind of a macro condition, and it just seems like the US was booming at the same time period when China was cracking down. China was already front-running this entire recessionary pressure. And I think time will tell who's on the right side of this curve.
So right now, the tech scene in China is not as hot as a result of all these regulation. And obviously, everyone is waiting for China to reopen so then they can enjoy the economic prosperity again. Now, then we skip ahead to the more recent articles, July 10th, 2022. More fines as well. Even though it has been over a year or more since the Ant IPO got halted, there are still more fines. The crackdown is still not over. China is still having a very tight leash on the technology industry, which is obviously hampering its growth. Now, here you can see August 21st, 2022, which is just last week, much closer to where we are today. They're looking to scale back and cut costs. And this, of course, is coupled with the recession problem in China, along with the real estate collapse, and also US dollar becoming stronger because they're increasing interest rates, and China is actually lowering interest rate, which causes capital to flow from China to US, and now they're looking to scale down. So which is very reasonable because if the economy is not good, you can't really scale up anyways. Now, sometimes you'll encounter articles saying that China is thinking about reviving Jack Ma's Ant IPO as crackdown eases, but these kind of articles get published every couple of months, and so far nothing has really changed. So I do think eventually Ant IPO will be, revived. It will go public in Hong Kong or, Beijing or the Shenzhen exchange, but then there is really no timeline. And yes, we can be hopeful about it, but at this point, I have already exited my Alibaba position, so I actually have no more China stock.
Okay, so if I can jump in here, he made a few comments, so I'll target them one by one. Firstly, about this idea of following Charlie Munger and Warren Buffett. This idea of cloning is extremely dangerous. For retail investors doing it or believing it religiously, I would still profuse or even try to plead to you guys that hey, you guys should do your own due diligence and don't just buy a stock just because Buffett bought it or just because Munger bought it. Personally, for me, I've entered the position much earlier than Munger. It would be a lie to say that when Munger bought the stock, it didn't increase my conviction. Of course, it did. Munger is probably one of the investing idols and goats out there. And similarly, when I bought TSMC earlier than Buffett, and subsequently Berkshire started a position in TSMC as well, my conviction also skyrocketed. So I think we just have to be critically aware of many of these biasness, especially when you want to land authorities from these investing goats. You need to be discerning of this some sort of bias, and just because Munger bought it, that's why your conviction is like 100%. I think that's fairly dangerous. And the second point, he talked about the cultural differences. I think it's a whole topic in and of itself. If you compare how you do business in China versus in the US, I admit to all the different circumstances and the nuances between the two countries. And on the day that I've decided to allocate capital to individual Chinese companies, I've already accepted the rules of the game. So for those of you who haven't accepted your fate, please do so as soon as possible. And on the last part about this idea of an IPO, yes, there was many articles, and every time there was this Reuters report or Bloomberg article talking about a potential revival of an IPO, the stock price essentially shoots up and then it comes down. I think it has been a really frequent development to a point where people are saying that it's essentially cry wolf. Every time there was people familiar with the matter, we just dismiss it, saying that, oh, it's fake news. And surprise, surprise, look at how far we've come. As of the recording of this video, January 2023, that's around 4 months after Eric uploaded the video, it seems like it's true that Ant recently got the blessing, or whatever you might call it. And a lot of people are punting that Ant might go IPO in 1 year's time, in 2024, after the recent major shareholding change. Like the story where the boy cried wolf, you don't know when the wolf really comes. And if you're going to keep timing the entries, trying to buy into the lows and sell into the highs, I don't really know how you're going to catch it. But that's just me. If you guys have the ability to do so, feel free to do it. It's your money at the end of the day.
In terms of this timeline here, you can see that initially I entered at 200, which if you use the historical price, it was actually a discount. But because of my expectation of the future, I expected the regulation to be resolved quickly. I expected the IPO to come back alive, which both events did not happen to date. And there is also the SEC delisting problem with all the Chinese stocks, which further hamper the growth of the stock price. So in the end, I exited near, let's say, 100. And at that point, I was like, okay, I'm done with Chinese stocks because I realized I don't have a competitive advantage when it comes to investing in Chinese stocks. When it comes to investing in Chinese stocks, you need to know the policy very well, and the policy can change very quickly. And let me give you one of the examples. So EDU, New Oriental Education Technology Group. So this is actually a stock I analyzed within Investing Accelerator, but personally, I didn't know it enough. So then I didn't invest in it. And some people who are more interested in education actually invested in it. And here you can see historically, the stock itself has a very strong trend. It's fantastic. And then you might be wondering, hey, as of mid-March 2021, what caused this giant drop from $190 to $28? And this is actually such a significant drop. It's like over 70% drop. So you need to understand why. It was due to one policy change. If you are familiar with the education system in China, there's a lot of focus on the high school examination in order to get to university. So there is actually a national-wide examination, and a lot of people get additional tutoring to get through that exam and basically get a higher grade. So what this creates is a culture of, cram schools, and you will see that in Korea, Japan, China, very common, where kids are just going to cram school every day to prepare for that exam. Now, in China, they said that these are not good for kids. These additional profit-making tutoring companies should not exist per se. So there's actually a more specific wording to that, but that is basically what the intention is. Within 1 year, just a couple of months, you can see the stock price actually plummeted from the $200 high all the way down to $28. Well, the question is there anything you could have done to escape this loss? And this is actually a question I think a lot for Alibaba here, for Tencent, which is 700 here. During this period, is there anything you could have do to A, minimize the loss, B, avoided the loss, and C, made a profit from it of some sort? If you have been following me for a while, you'll notice that, hey, I like to use options because it allows to multiply my profit. But when you think about this is actually not an option problem. And there's no way you could have invested long, meaning you think the market will go up, buying shares or option, that you would make money during this period of time, because the stock continues to go down week after week. Even if there are a couple of weeks that are going up, the stock continued to go down for many weeks. In fact, it was going down for a year and a half. So
I think before this, if I can interject, I think here's the issue. It's a difference in investment philosophy, of course. He starts backtracking and saying that how, upon reflection, whether you are able to avoid any sort of loss or be able to capture gains when the stock was going down. Of course, from a technical viewpoint, many of the technical traders probably profited a lot from this downfall, because every indicator is saying that Chinese stocks are just going to hell. But I think if you were to really reflect back into the fundamental investment philosophy, what you're owning is essentially a piece of a business. And as long as the business continues executing, continues bringing in profits, shareholders will ultimately be rewarded, as long as you buy it on the cheap, of course, if you don't overpay. Similarly, if you reflect back in Berkshire Hathaway's, which is owned and run by Buffett himself, his initial BYD position went up. If I'm not wrong, I'm quoting this at the back of my head, it went up 3 times and then it crashed back down again. It went up 5 times and then it crashed back down again. And then it went up 10 times. And then I think Buffett is slowly taking some sort of profits off the table. So I probably, when I think of it from his perspective, like from Warren Buffett, if I were to role play him, I don't think he'll be sitting at his desk saying that, I bought BYD, it 3x, why did I take profit? And then it crashed back down to the initial position. I'm not too sure whether it crashed back down to 1x or whether it crashed back down all the way back to its cost price. But I do know that the entire ordeal of his BYD investment was intense. At 3x it came down, at 5x it came down, then at 10x again. So, which begs the question, why are we constantly so obsessed saying that, I want to always time the top, and after it goes to the top and then I'll sell a portion or sell everything, and then when it comes back down again, I enter again. Like, you really have to really dig deep down into investment philosophy. What are you trying to do? And why do you have this perspective? And why are you trying to do it? I think that's just some perspective. I'm not saying that it's a bad way of investing. Of course, if you're able to time the top and bottom, you'll probably be a billionaire soon, because you're great at timing, right? But I'm saying that in hindsight, of course, it's easy to say that, the tech crackdown is coming, you should have sold your stocks and stuff, and 60 was the best time to buy. And I hope that for those of you who are timing the market or timing this entire tech crackdown, I do hope that you got in at $60. You're probably enjoying a 2x now, easily. I think back to the point of expectations, Eric has also been extremely frank and transparent. He said that he was expecting a certain outcome and a certain narrative to play out, and it didn't.
During this period, you would incur a very significant loss. And this is probably one of the good things about Charlie Munger or whatnot, is that if they invest in Alibaba, let's say at 250, 200, 150, 100, they plan to hold for a very long time, 5 to 10 years. So this is probably getting in at a discount. But for a lot of regular investors like me and you, chances are 1.5 years is already a very long time. And if you're not really seeing results within 1.5 years, then chances are you're going to be exiting that stock, unless you intend to hold for 5 years plus. And
1.5 years to me, at least, is still a very, very short time period. But yes, I guess you guys decide on your own time frame.
During that period, when I was holding on to Alibaba, my plan was to hold on to it for around 1 to 2 years at 200. So at that point, I have already reached my maximum duration that I would like to hold it for, and I would rather reallocate it to other companies that are safer, the companies that don't have delisting issues, the companies that are not going to get repeatedly fined by the Chinese government, companies that have a better growth trajectory and are able to continue to expand because there's no tight regulation that prevents them from becoming the number one player in the market. So when you think about all these factors, it is a stock selection problem. So the only way you could have avoided the loss, or I could have avoided the loss, is to not invest in Alibaba to start with. And sometimes those are some of the most difficult decisions that you need to come to, is to not invest in that kind of stock to start with. Because sometimes if I invest, let's say earlier in March 2020, like at this red EMA, I would have made a very handsome profit. But because of the nature of the environment, the policy, even though the fundamental of the company is very strong, the technical also looks like it is at a discount. If there is an overarching government issue, especially for Chinese stocks in China, you're not going to be able to escape the consequence. And I think Alibaba is a perfect example of it. If I go back in time and I can invest in any China stock that I can pick from, okay? Any China stock, I would still invest in Alibaba because it was the number one stock. I wouldn't have been able to avoid this mistake unless I don't invest in China altogether. And I think, yes, there is money to be made when you're investing in China, but you can also see a simple policy can cause, one of the most blue chip stock in China to drop from $300 all the way to $100. Now,
I think I would agree with what Eric has to say here. Actually, we are in no disagreement. If you to turn back time, Alibaba and Tencent was really a really good pick. Both are extremely high quality compounders, but I think the entire narrative around them, at least for the last 2 years, has essentially sent the stock down, like beyond recourse. It was just down and down and down. And for those of you who actually had the diamond hands and I would say diamond balls to go and catch it, many of you are probably sitting in a profit when it was at the lows, of course. I think back to this perspective of trying to go into quote-unquote safer stocks, I think as long as you're putting your money into the capital market, there really is no idea of safe. Everybody think that there's a risk-free investment. Other than treasuries and bonds from the government, even governments do default. So there's really no risk-free alternatives. So I think when I reflect back, think about it, I'm actually quite curious where Eric has redeployed his capital and what other companies was he talking about that are quote-unquote safe. So I think the first few names that comes to every investor's mind are probably like Apple, Amazon, Microsoft. Those are great companies. But I think if you have to track back their performance, at least in the last 4 months, at the time of this video that was uploaded, I think around the mid to end of August, if he redeployed his capital by trying to chase or trying to redeploy it to safer stocks, I think those safer stocks actually suffered a greater loss compared to many of these Chinese names because they're just in a different cycle and the Chinese internet companies are currently on a bull cycle. So hindsight is 2020. Nobody knows what exactly is going on, but I do like to echo what he had to say. It's a stock picking problem. I think you choose the hill that you want to die on. And in this case, for many of these Chinese investors, I think you guys are probably comfortable with the risk. And for those of you who aren't, the 2-year episode is a good timeline for you to reflect and for you to make the decision after this recent recovery on whether you decide to hold, whether you're comfortable with the risk, and or whether you want to redeploy your capital. So I will leave it as that.
Now, I'm probably going to get some comments that, hey, right now it's 100. It's a fantastic price. Shouldn't you be buying it? Because now there's a huge upside from 100 to 300.
At $60, it was an even more fantastic price.
And that's actually what a lot of analysts or YouTubers will be telling you. But for myself, I've already made the rule of not investing in Chinese stocks anymore because of all the environment, the SEC delisting problem. But one of the good news about this SEC delisting problem is that they actually arrived at some sort of preliminary deal to allow the US Accounting Board, PCAOB, to review the audit documents of these Chinese companies listed in the United States. So this is actually a piece of good news, which is why if you're looking at the latest week for Alibaba, it's actually going up. Now, there are a couple of important points you need to note about this deal. Alibaba is listed in both Hong Kong and the US exchange. And US was the original exchange, and Hong Kong is actually the secondary exchange, but they actually had the option to convert that into a primary listing in Hong Kong and make US the secondary exchange. So what this does is Alibaba is positioning themselves so that in case they ever get delisted by US SEC, they're just listed in Hong Kong. So that means it will either become over the counter in USA, or you can't trade it from US and you actually need a Hong Kong brokerage account to trade it through the Hong Kong exchange.
I think this entire delisting, VIE structure, stuff like that, it doesn't really concern, it's really just narrative building. It doesn't concern the fundamentals of the company. Alibaba is still one of the strongest company in China, 1 billion plus users. Lives, livelihoods, businesses are being built on the entire platform. People rely on Alibaba for many things. Like I said, many lives are being built on the entire ecosystem. So honestly, a lot of all this narrative building, some are real concerns, of course. I'm not going to denounce saying that all these are just narrative and you shouldn't listen to it. There are merits to many of these concerns, but there is also a lot of noise in between. So your job as an investor is really to sieve through what is instrumental and important to the company and what is not. And on the last point, before I actually conclude this entire video, he did say that he has made the commitment, or at least made the promise to himself, that he's going to stay away from Chinese stocks. And I think through this entire tech crackdown episode, there were many investors, many retail investors had the same conclusion. I'm not going to touch China anymore. China was basically like their first love. They broke their heart. They're not coming back. And I think at the peak of the crackdown, when Alibaba was trading at crazy valuations, there were many distasteful comments in my comment section as well. And that was also when I believe that there was really this great quote from Buffett. When everyone is fearful, you are supposed to start to become greedy. And for those of you who actually became greedy, congratulations. And with that, I'll see you in the next video. But more importantly, I will finally see you on the moon. Goodbye.